Welcome to the CFA Level 1 Practice Test 1. Domain, Financial Statement Analysis, Part 7. How should an analyst interpret critical audit matters included with an unqualified opinion? A. Critical audit matters show material misstatements but support the unqualified opinion. B. Critical audit matters indicate scope limitations only covering parts of financials. C. Unqualified opinion confirms fair presentation, CAMs highlight complex audit judgments. D. None of the above. Answer is C. The unqualified opinion confirms fair presentation, CAMs identify challenging audit judgments without changing the opinion. What is the net income impact of a 200 basis point decrease in the operating margin? A. $22.0 million. B. $26.4 million. C. $17.6 million. D. Not applicable. Answer is C. A 200 basis point decrease reduces EBIT by $22 million. After tax, net income decreases by $17.6 million. What is the closest inventory turnover for Alpha Corporation? A. 4.17. B. 5.00. C. 6.25. D. None of the above. Answer is B. Inventory turnover is COGS divided by average inventory, $750,000/$150,000 equals 5.00. How does an active investment strategy with FVPL securities affect net income volatility? A. Results in more volatile net income due to interest and fair value changes. B. Recognizes income only upon asset sale, leases recognize income over lease life. C. Cash flows are entirely investing activities unlike financing from leases. D. Not applicable. Answer is A. FVPL securities require recognizing both interest and fair value changes, causing volatility. Which factor is least likely to cause a decrease in defensive interval ratio? A. Decrease in cash and cash equivalents. B. Significant increase in accounts receivable. C. Increase in annual operating expenses. D. None of the above. Answer is B. Increase in accounts receivable increases DIR, thus, least likely to cause decrease. What does the Management's Discussion and Analysis (MD&A) section typically include? A. Independent auditor's opinion on the financials. B. Specific depreciation method used. C. Management's perspective on results and trends. D. Not applicable. Answer is C. MD&A provides management's insights on operating results and trends. Which financial statement item best supports suspicion of inflated revenue without cash collection? A. Increase in accounts payable. B. Decrease in deferred revenue liability. C. Increase in ending accounts receivable. D. None of the above. Answer is C. An increase in accounts receivable suggests revenue reported but not yet collected. How should an analyst interpret accounting goodwill reported after acquisition? A. Direct measure of specific unrecorded assets like brand reputation. B. Definite life intangible asset amortized over useful life. C. Residual purchase price over net assets, differs from economic goodwill in stock price. D. Not applicable. Answer is C. Accounting goodwill is the residual premium paid over identifiable net assets, distinct from economic goodwill. A key credit risk assessment characteristic is the company's A. Potential for future earnings growth. B. Capacity to service debt and short-term obligations. C. Effectiveness of corporate governance. D. None of the above. Answer is B. Credit risk focuses on ability to meet debt and short-term obligations. Which factor is least likely to enhance financial reporting effectiveness? A. Frequent changes to accounting principles. B. Independent auditing. C. Strong regulatory oversight. D. None of the above. Answer is A. Frequent changes to accounting rules reduce comparability and hinder system functioning. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.